as it's known, has accepted KPMG's offer to resign as its external auditors. SABC said in a statement KPMG cited possible perceived independence concerns if they were to perform the 2018 audit as a result of the current SABC-appointed inquiry. The inquiry looking into some of the former and current KPMG employed chartered accountants and their conduct. It will be announcing its conclusion shortly. SABC said it would now begin a tender process to appoint external auditors, and its board will table a progress report to its members at the annual general meeting at the end of June. Following the completion of a tender process, a special general meeting will be called to approve the appointment of the recommended audit firm. Now, South Africa's economic performance has slumped slightly, specifically looking at manufacturing, a gauge of its health. And this comes, unfortunately, after two successive months of expansion from the beginning of the year. So the gauge is the seasonally adjusted Absa Purchasing Managers Index, looks at the health of our factories. The PMI dipped into May, back into negative terrain. It fell to 49.8 in May, and anything below 50 suggests contraction. It was above 50 in April. According to the Bureau for Economic Research, it was largely weakened by a dip in new sales orders and subdued output growth. The Business Activity Index, a measure of output, fell to 47.2 in May from 49.1 in April. The PMI has fluctuated with a weaker currency and worries about the global economy not expanding fast enough weighing as well. Well, earlier I spoke to Cruikshank from the Institute on Race Relations about some of today's market developments. We were looking at the fact that the JSE European markets all up quite significantly. A lot of that about Italy, huge relief that Italy finally has some form of government intact at the moment. And also the trade wars, the fears that were sparked yesterday subsided somewhat. I started by asking him about those trade concerns.
But I was looking at the 10-year bond rate in Italy. A month ago, you had to pay to hold the bonds. So the interest rate was minus 0.5%. It's now 2.5%. So it's not a big difference, but it's 5 times as much as a negative as it was a positive before. You know, these changes are building up, and I fear that there may be the same sort of thing in the US rest of the world trade war.
So the volatility will continue, the ups and downs.
Yes, and there's nothing financial markets hate more than anything else is high volatility, uncertainty.
The payroll report, the jobs report out of the United States later today, how important is that? Very
important indeed. Just to see whether the economy is still gathering momentum. We had the early private sector jobs yesterday, and you know, any economy which can create 100,000 or more jobs every month, heck, that is still going at quite a brisk rate. And I think that just says maybe we'll see changes in monetary policy which can have an impact worldwide.
So I saw some expectations of 200,000 jobs, which will be up from April. But the problem is the better things get in the United States, I think you're hinting at this, the more likely interest rates will go up there, investors will go there, not here.
That's right. And you know, we're seeing it on the JSE. In this month alone, we've seen over 4 billion rands worth of net foreign outflows. That's a huge amount in South African terms, and I think that what it means is that the move to safe havens is not going to help us.
What is causing that? So is it all just because of what's happening in the United States? It's not a lack of confidence this time in South Africa.
It's a growing of confidence in the other part of the comparison, and that is in America. Growing confidence in the dollar, growing confidence in their having higher interest rates and being a more attractive investment arena.
What does this mean for President Cyril Ramaphosa's investment envoys going around the world trying to attract more interest?
It's going to be very difficult indeed, and I think we have to face the fact we will probably have to pay more for the money that we borrow. You know, from foreigners' point of view, return of investment is more important than return on investment. So they want to be sure they can get their money back, that the investment is safe, that South Africa is still a safe haven. And I'm not so sure that we can justify that just at the moment. So I can see our rates going up a little bit in the near future.
You've spoken about this. We were seeing a lot of good indicators suggesting that the political change in South Africa had been very warmly received. But now a wobbling, and PMI came out today, which looks at the health of factories, back in negative territory in contraction mode rather than expansion mode. So does that add to the sense of wobbling now?
Absolutely. And it's only marginally below 50. I think we looked at it 49.8. It's marginally below 50. Below 50 on that index means that the sector as a whole is contracting. Above 50 expanding. We've had 2 months of expansion. And hey, is that the cycle? It's not much of a cycle to be positive about just yet. So I'm a bit concerned about that. Let's see what happens in the next month. But the monthly data is looking that it's not supporting a go for growth type attitude right now.
What a pity. And then trade data as well, looking at imports, exports, that was hitting the rand yesterday. So is that part of the same sort of wobble, I guess?
Yes. And so far for the first quarter we had a trade deficit of 17 billion. Compared to last year, the first quarter was a surplus of 8 billion. Now we've swung around 2 to 1 and it's going in the wrong direction. So I think this is just saying that demand for our base commodity exports is not growing at a robust rate, and we're not able to stop the imports that we need to any significantly. I think it just means the South African economy is having a lot of trouble getting up the momentum and keeping going at a brisk rate.
And like you're suggesting, it's out of our hands to some extent.
I'm afraid
because
so.
we're caught in this global economy.
Yes, I think what we have to face is, we're looking, what does it mean for the overall growth in the economy as a whole? There are some positive comments. The Reserve Bank last week said growing at 1.7% this year, and the same again next year. Well, that's not a lot of progress, especially when the population growth is going to close to 2%. It means as a whole the country's actually getting poorer on a per person basis. So we desperately need a bit more impetus. We need foreign investment, we need job creation. I'm afraid we're not seeing it yet, but that's what's needed.
And motorists are getting poorer, definitely. We heard about another whopping petrol price increase, an all-time high. The rand keeps weakening. So we saw that high in February, but is that trend going to continue? Well,
it'll be very difficult to build up greater corporate and consumer demand, confidence, because confidence means there's more spending, there's more investment, and we're just not seeing that at the moment. That's what's needed. Perhaps it'll come. Perhaps Mr. Ramaphosa's impact will build up again. It has perhaps lost a little bit of momentum, I think, but it's still a positive attitude, and I think we have to just look at it that way.
All right, so the JSE looking better this Friday, ending the week on a high because of those global concerns easing, but Ian Cruikshank's pointing to the underlying concerns. A whole lot of factors could affect us right now. Let's take a look at how the numbers panned out.